Good evening, all of you, to all my dearest students of CA Final Full English. I hope you all are doing good. I hope your studies are going on great. Just give me one confirmation that are we live? Am I audible? Is my video visible properly? Then I will go ahead with the discussion. Just give me a confirmation, please, all of you. So I hope I am audible, I am visible, and my video is visible properly, and everything is going on fine. So today's session is especially for our full English students who wants to learn direct tax amendments in full English. Yesterday we have already taken a session of direct tax amendments for September 25 and Jan 26, which was in Hindi and English mix. So what is this amendment session all about? Let me tell you, all of you. So if you are giving your exams, particularly in, good evening Hema Lata, good evening Marilyn, good evening Mahalakshmi. So if you are giving your exams in September 25, your CA final exams, for CA inter there are no amendments, okay? There are amendments only for CA final. Then you have to do this amendment sheet. Of 35 pages of ICAI, okay? Generally the rule of ICAI exams are for direct tax, for indirect tax, all the amendments applicable 6 months prior to the month of exams shall be applicable to your exams. So if your exams are in September 2025, then 6 months prior to September 2025 is 28th of Feb 2025. So all amendments, that is notification, circulars, rules, which are notified by the Government of India till 28th of Feb will be applicable to your exams. So ICAI has released one statutory update amendment sheet in which they have covered around 35 pages. They have covered some circulars, some notifications, some rules. As a student, you have to do that, okay? Now, if you are giving your exams in Jan 2026, then also you have to do this 35 pages amendment sheet. This is applicable for you also. Plus there will be few more amendments. Okay, which will be applicable for you all. Now I don't know which all amendments will be there for you all. So all those amendments which will come 6 months before your exams. So if you are giving exams in Jan 26, then 6 months before Jan 26 ends on which date? On 31st of July 2026. Okay. So whatever 31st of July 2025. So whatever amendments ICAI will bring till 31st of July 2025 will be applicable to Jan 26 exams. The moral of the story I am trying to say is, you have to do this amendments, okay, whatever we are going to do in today's session. This session is applicable for both September and Jan 2026. For September 2025, nothing else except this particular amendment booklet. For Jan 26, few more amendments which will come later on. Whenever ICAI will release that statutory update separately, I will discuss that also with you all later on, okay? I hope it is clear to all of you. So now, without wasting any further time, let us start with our discussion. Let us start with our first amendment. There are amendments over here in few chapters, like there are amendments in TDS, there are amendments in prosecution, there are amendments in transfer pricing, and there are amendments in non-resident taxation. These are the only 4 topics in which there are amendments. Apart from that, there are no other amendments which are applicable over here. So let us start. First of all, they have given a summary of all the amendments in which all chapter there is an amendment. So first of all, we are going to start with our first amendment, which is on TDS. On TDS, there are around 4 to 5 amendments, not very big, very simple amendments on TDS. Now, what is the first amendment of TDS? Pay attention, please, all of you. The first amendment of TDS is a circular, is a notification which is 28/2024, dated 7th of March 2024. Now, what does this notification tells us? Let me explain you with the help of an example. Pay attention on the board. Suppose I am a payer and there is a payee over here. Now the pay is not a normal pay, the pay is a unit which is located in IFSC. The pay is an IFSC unit, it's not a normal pay. And this pay is claiming deduction under ATLA. Now in ATLA, the government gives you an option to claim deduction for 10 AYs out of the first 15 AYs. So out of the first 15 AYs, you can claim deduction in 10 AYs, consecutive AYs. Suppose out of the first 15 years, you can claim deduction from 1 to 10, or you can claim from 2 to 11, or you can claim from 3rd year to 12th year, or you can claim from 4th year to 14th year, you can claim from 5th year to 16th year, as the case may be. So you have an option to claim 10 years deduction under ATLA of your profit out of the first 15 years. But the 10 years has to be consecutive in nature. Now, the amendment made over here is, if you are a payer and if you are making a payment, if you are making certain payments to a unit which is located in IFSC, which is claiming deduction under ATLA, then you are not supposed to deduct TDS. No TDS is required in that case. Okay, no TDS. Now, the point to be kept over in your mind over here is, the first important point which you have to keep it in your mind is the pay has to be an IFSC unit, condition number 1. Second, the pay should claim deductions in that year. If the payee wished that TDS should not be deducted, then in that year the payee should have been claiming the deduction under ATLA. Third condition, the payer will not deduct TDS on certain payments, not on all payments. Now, which are those certain payments? Those have been notified in this notification. Shall we see that? Let's see. Now, these are the payments on which the payer will not deduct TDS. Who is the payee? Payee is an IFSC unit. There are 14 different kind of payees over here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. And for every payee, there are different nature of payments on which TDS should not be deducted. So the first payee is banking unit. And if you are making a payment of interest income on external commercial borrowing or loan, then no TDS to the banking unit. If you are making a professional fees payment to a banking unit, no TDS. Referral fees under 194H, no TDS. Brokerage income under 194H, no TDS. Commission income, forfeiting income on services, no TDS. Then second, insurance intermediary office. It means it is an insurance agent to whom you are making insurance commission, no TDS. If it is a finance company, again interest, dividend, commission income on factoring and forfeiting service, no TDS. If it is a finance unit in IFSC, claiming deduction under ATLA, don't forget that. All the 3 payments are same as above. Interest, dividend, commission on forfeiting and factoring services. Fund management entity, professional fee, you are making payment, no TDS. Broker dealer, dividend income, you are making payment, no TDS. Investment advisor, investment advisory fee, you are making payment, no TDS. Registered distributor, distribution fee and commission fee, no TDS. Custodian, professional fee, commission fee, no TDS. Credit rating agency, credit rating fee, no TDS. Investment banker fee, no TDS. Debenture trustee, trusteeship fee, no TDS. International trade finance service, ITFS, commission income, no TDS. And last but not least, fintech entity, technical fee, professional fee, commission income, no TDS. So these are the 14 entities which are located in IFSC to whom you are making certain payments which are mentioned over here. No TDS is required to be deducted, but you have to keep it in mind. The relaxation from TDS is only available if the payee, if these payees are claiming deduction, if these payees are claiming deduction under ATLA, be very careful. Only then the deduction, no TDS is applicable. Otherwise, the payer has to deduct the TDS. For that, the payee has to give a statement cum declaration to the payer. I am a payer, you are a payee. You have to give me a declaration that you are claiming deduction under ATLA. Only if you give a declaration to me, then only I will not deduct the TDS. Okay. So this is what it is written over here. Sir, if the payee is not claiming deduction, then under ATL, then you have to deduct TDS. Then this relaxation is not applicable. Okay, I hope it is clear to all of you. Suppose the pay is saying that I will claim deduction from third year. From third year to 12th year, I will claim deduction. It means in the first and second year, the pay is not claiming deduction. Therefore, in that case, you have to deduct the TDS. Is everyone clear with this first notification? Please tell me so that I will go with the second one. Please tell me. Is everyone clear with the first notification? You have to answer, please. Please type something and say. Okay. Now let's move on to the second notification. Now it's an old circular, which I don't know suddenly why ICAI want to include that in the syllabus. So it's a circular which came in 2016 on 4th of July 2016. Till now they were not including this. Suddenly over the night they realized that we should include that. So they have included that in your syllabus. Nevertheless, I have made a small summary to explain this circular to you all. Pay absolute attention, all of you. Okay. There is an offshore banking unit here. First of all, what is an offshore banking unit? Any bank which has a branch, it's a branch of a bank located in SEZ. Okay. So if a bank has a branch where, which is located in SEZ, that is known as an offshore banking unit. So suppose if SBI has a branch in special economic zone, then that branch of SBI will be called as offshore banking unit. Okay. So if an offshore banking unit is there over here, and on the right hand side there is a non-resident or there is a not ordinary resident. Residents are not there. On the right hand side there is either a non-resident or there is either a not ordinary resident. Now what they are doing? Suppose this non-resident or this not ordinary resident is giving deposit to offshore bank. Means it is giving deposit to whom? It is giving deposit to a branch of an SBI which is located in SEZ. Or it is giving money, it is giving loan to SBI. And in return, SBI is giving interest. Then such interest is exempt under section 1015 clause 8. You can check over here. Such interest is exempt under section 1015 clause 8. Now, because it is exempt under section 1015 clause 8, the CBDT has come up with a circular and saying that therefore no TDS is required to be deducted. Now, what will I do by deducting a TDS of a person whose income is not taxable in India? This non-resident interest income is exempt as per this section. Now, because it is exempt, why the hell I will deduct TDS? Therefore, there is a relaxation from deduction of TDS. So, you have to be very careful who is the payer over here. The payer is offshore banking unit. Who is the payee? The payee is non-resident or NOR. What is the payer giving to payee? The payer giving to payee interest. On what? On deposit or borrowing. Then no TDS is applicable because that interest is exempt under section 1015. Okay, I hope it is clear to all of you. Is it clear? Please reply. You have to reply after every amendment so that I can go ahead with the next one. Now, the third amendment is given under section 194N. Sir, what is 194N? 194N talks about withdrawal of cash from bank or from cooperative bank or from post office. So, if I withdraw more than 1 crore rupees from a bank, from a cooperative bank, from a post office, then the bank will deduct TDS at the rate of 2% in excess of 1 crore rupees. Okay. For some people, the limit has been reduced to 20 lakh rupees also, who have not filed the return for the last 3 years. So, all these exceptions, all these provisions are there in 194N. Now, you might be knowing that in 194N, there is an exception. That if certain people withdraw the money, then no TDS will be deducted by the bank. Like if the money is withdrawn by government, if the money is withdrawn by bank or cooperative bank or post office, if the money is withdrawn by a commission agent, if the money is withdrawn by money changing agencies, if the money is withdrawn by white label ATM operators, remember or not? So there are some exceptions to 194N, whereby if the money is withdrawn by these specified people, then no TDS is applicable. Now CBDT has notified one more person over here, by whom if they withdraw the money from bank or cooperative bank or post office, then TDS will not be deducted by the banks. So who are those people on which this section is not applicable now? Check it. Notification. As per 194N, shall not apply to foreign representations duly approved by Ministry of External Affairs, including diplomatic mission, point number 1. Agencies of United Nations, point number 2. International organizations, point number 3. Consulates and offices of consulates, point number 4. And offices of honorary consuls, point number 5. Which are exempt from paying taxes in India as per the Diplomatic Relations, Vienna Conventions Act 1972 and the United Nations Privileges and Immunities Act 1947. So who are these people? These are all international people. These are not Indian people. These are foreign representations. These are foreign representations which has been approved by our government, that is Ministry of External Affairs, which also includes diplomatic people, which also includes agencies of UN, United Nations, which also includes international organizations like WHO, etc., which also includes consulates and offices of honorary consuls whose taxes are exempt as per the Vienna Convention Act 1972. So if these people are withdrawing money, then the provisions of 194N is not applicable. I hope it is clear to all of you. Is it clear? I hope it is clear. Correct? Now, next one. Again, relaxation in TDS. So the government has been giving a lot of relaxation in TDS. Especially in the last few months, they have been giving a lot of relaxation in TDS. No TDS is required to be deducted if the payment is made to the following 3 people. If the payment is made to these 3 people, then TDS is not applicable. Why? Because their income is also exempt under income tax law. So the number of items which are mentioned below over here, all of their income is exempt under section 10. Therefore, there arises no question of deducting TDS of such people whose income is exempt. Who are these people? The first one is Credit Guarantee Fund Trust for Micro and Small Enterprise. Sir, who are these people? These are different institutions set up by the Government of India to finance small businesses so that they can run their business. So the Government of India has set up small institutions like this, and these institutions' main primary criteria is to finance small businesses so that small businesses, micro, small enterprises run properly in this country. So the first entity over here is if you make payment to Credit Guarantee Fund for Micro and Small Enterprise as referred to in 1046B, no TDS. Second, if you make payment to National Credit Guarantee Trust Company Limited, which is again financed by the central government, no TDS. Or Credit Guarantee Fund, which is again wholly financed by the central government and managed by National Credit Guarantee Trustee Company Limited as referred to in 1046B, again no TDS. So if you make payment to these specified entities, no need to deduct any TDS. Okay, I hope it is clear to all of you. Now the next one and the next one, these 2 points I would like to explain you one by one. Both of them are related to each other. You all might be knowing the provisions of 194Q. What is 194Q? If there is a buyer over here and if there is a seller over here, and if the buyer's last year business turnover is greater than 10 crore, and if I purchase goods of more than 50 lakhs, correct? Then the buyer has to deduct TDS at the rate of 0.1% on excess amount. On excess amount means in excess of 50 lakh rupees. I hope everybody is aware of this provision. Now, so if the buyer's last year business turnover is more than 10 crore and if the buyer is purchasing goods of more than 50 lakhs from a seller, one more thing, the seller has to be resident in nature. Then there is no need to deduct, then there is a need to deduct TDS at the rate of 0.1% in excess of 50 lakh rupees. Are you clear? Now, what is the amendment over here and what is the relaxation? The government has said that no TDS should be deducted if the seller is again claiming deduction under ATLA for the 10 years out of the 15 years. So, the 10 years for which the seller is claiming deduction under ATLA, the buyer will not deduct TDS. Okay. How will the buyer come to know whether the seller is claiming deduction under ATLA or not? Again, just like the first notification, the seller will give declaration to the buyer that I am claiming deduction under ATLA, therefore do not deduct my TDS. Okay. So, if the buyer is purchasing goods from such seller who is claiming deduction under ATLA, so the year in which the deduction is claimed by the seller, in that year, the buyer will not deduct TDS. Okay. And in the year in which the seller is not claiming ATLA, in that year, obviously, I have to deduct the TDS. Is it clear to all of you? I hope it is clear. Similarly, one last amendment on TDS is given over here, which is on section 206C, subsection 1H. Now, here, this section is on TCS. Here, there is a seller. Here, there is a buyer. Now, if the seller's last year business turnover is greater than 10 crore, okay, and if the seller sells goods of greater than 50 lakhs, then the seller has to what? Collect TCS at the rate of 0.1% on excess amount. Now, again here, same relaxation. The seller will not collect TCS when if the buyer is claiming deduction. Under what? ATLA. For what? For how many years? For 10 years out of the first 15 years. Is it clear? So, if the seller is getting a declaration from the buyer and the buyer is giving a declaration that I am claiming deduction under ATLA, then in that case, the seller will not collect TCS. So, just similar to this. Here, the buyer will not deduct TDS if the seller gives what? A declaration. And here, the seller will not collect TCS if the buyer gives what? A declaration that he is claiming ATLA. I hope it is clear to all of you. Again, I am saying, for any other year for which the other person is not claiming ATLA, you have to deduct TDS, you have to collect TCS. I hope it is clear to all of you. Is this clear to all of you? Please tell me. If yes, then we will go ahead to the big one for the day. Okay. Please tell me fast, all of you. I want your approval. Please, I am waiting. Kokila, Hemlata, Mahalakshmi, Merlin, Chandu. Please, shall we go ahead? Now, let's go ahead to the next part. And next part is one of the most important part for your exams and one of the most trickiest part that we are going to come across today. You have to be very patient. It will take a lot of time, at least 1 hour, 15 minutes it will take to understand this concept. Now, what is the next point that we are going to discuss today, sir? Next point is something which generally a student leaves for the examination. The student doesn't prepare properly for the next concept. Sir, which concept we are talking about? We are talking about compounding of offenses. Now, there are a lot of offenses under the income tax law for which you have to pay penalty as well as there is a prosecution. There are a lot of offenses under the income tax law for which there is a prosecution, you have to go to jail. You will be sent to jail if you commit that particular crime under the income tax law. So, for that purpose, the government gives you an option of compounding. First of all, we need to understand the meaning of compounding. First of all, I will explain you the meaning of compounding. You all have to give me the confirmation that you have understood the meaning of compounding. Then only we will go ahead and discuss what exactly the provision is all about. So, generally, if I commit a default, say I have not paid the tax, or if I have not deducted the TDS, if I have not paid the TDS, so in that case, what I am supposed to do? There will be a penalty, there will be an interest. There can also be a prosecution on me, which will be launched by the Government of India, by the Income Tax Department. Now, If I don't want to go to jail, if I don't want the prosecution to be completed, then I can do one thing. I can go for compounding. And while going for compounding, if I go for compounding and if the government does compounding for me, then the government will tell me to pay some compounding charges. Okay. I have to pay that compounding charges. Once I pay that compounding charges, then I will be relieved from, I will be deprived from what, going to jail. So compounding is nothing but, in simple words, rather than going to jail, you will pay one hefty amount to the government, one charge will be paid to the government, and then you will not be sent to jail. And if you are not ready to pay that charge, then you have to go to jail. This is not penalty. This is over and above penalty. Penalties will be imposed on you like as per the provisions of penalty. This charge you are giving to get relief from what? From relief from going to the jail. Is everyone first of all clear with the meaning of compounding? What is the meaning of the term compounding? Then only we can go ahead with the discussion. Please tell me. Please say. Is everyone clear with the meaning of compounding? Okay. Now, sir, how compounding is done? To whom I should make an application? How much charges I have to pay? In how much time compounding will be done? For how many years I can go for compounding? For how many times I can go for compounding? For that, there is a CBDT guideline. How compounding will be done? For that, there is no provision under the income tax law. There is no section under the income tax law which explains everything in detail. But for that, there is a CBDT guideline. Now, from 17th of October 2024, the CBDT has revised guideline. They has revised the entire guideline. For what? For compounding. And one of the main highlight of this revised guideline is, there are many changes in this guideline. Earlier, this guideline was not there part of your syllabus. It was not there in your study material. I am talking about the old guideline. Now, because this new guideline has been notified by CBDT, which is applicable from 17th of October, therefore, ICAI wants you to study this. It is not that the guideline is coming for the first time. Earlier also guideline was there, which was the old guideline. But the CBDT has revised the guideline with effect from 17th of October 2024. And one of the highlighting point of this guideline is, under this new guideline, all offences are compoundable. Under the old guideline, only few offences were compoundable. But under the new guideline, every offence you can compound. Whether the offence is small or whether the offence is big. Whether the offence is of going to jail for 3 months or whether the offence is going to jail for 7 years or 10 years, it doesn't matter. All kind of offences can be compounded here. All. This is one of the highlighting point. Okay. So what we have learned so far? We have learned the meaning of compounding. Second, we have learned that there is a new revised guideline which explains us how compounding will be done, who will be doing the compounding, what are the charges, what is the procedure, etc., etc., etc. So our duty is to understand this guideline in great detail. It's an 18-page guideline. We are going to go page by page. We are going to go line by line. You have to be very patient enough. You need to answer me after every paragraph whether you have understood the things or not. Okay, be very careful. Otherwise, this is slightly tricky part. So be very careful for it. It will take some time for us to grasp this particular concept. Okay, but I will try my best to explain you everything very beautifully. Now, this guideline, first of all, section 279, subsection 2 provides that any offence under chapter 22 may either before, listen carefully, may either before or after institution of the proceedings, this is a very important line, be compounded by the principal chief commissioner Chief Commissioner, Principal Director General, or Director General. So, which offence can be compounded? Any offence under Chapter 22. When? Either before or after institution of proceeding. Proceeding has not been started. Sir, sorry to disturb, but in 2 days results, but very nervous. We'll talk about results sometime later. Let's talk about compounding today. Okay? For result, we will keep a separate session. Okay? Now, pay attention over here. So, any offence can be compounded. It can be compounded by certain officers like Principal, Chief Commissioner, Principal Director, Director General. Now, one of the important highlighting point of this paragraph is, every paragraph will teach us something. One of the highlighting point of this paragraph is, you can go for compounding before the department has started the prosecution proceeding, and you can also go for compounding after the prosecution proceeding has been started. Did you understand this point? Please tell me. Say, I made a mistake. Now I know that. Tomorrow prosecution can be launched against me. So I can go for compounding before the department comes to know. I can also go for compounding after the department has initiated the proceedings of prosecution. Are you clear? Please tell me. In both the cases, they can go for compounding. Okay, this is the first thing which is very important, which you have to keep it in your mind. Next paragraph tells us that CBDT has the power to issue guidelines, etc. for compounding, etc. which is applicable for your September examination, and obviously which is also applicable for your Jan exam. Whatever is applicable for September 25, it's by default applicable to Jan 26 also. Okay. Now, the revised guidelines has been given by the CBDT along with FAQs. So, for a lot of points, the CBDT has given us frequently asked questions. So, you have to understand the FAQs also to understand the concept in a better manner. Step by step we will go. The very first thing that they have explained us is the meaning of compounding. Compounding of offence means what? That's what I have already explained you. Let's see. Compounding of an offence is a mechanism whereby the defaulter is deprived of major legal consequence. So you are deprived of major legal consequence, like going to jail, etc. By what? By what? By affording him an opportunity to pay certain sum of money. You pay the money and get escape from jail, to escape prosecution. Okay. Now, next point, again it is repetitive of what is written on the previous paragraph. The specified offences can be compounded by the competent authority either before or after initiation of the proceedings. That's what I was trying to say in the very first paragraph, that compounding can be done. If the proceeding has not started, then also you can go for compounding. If the prosecution proceeding has just initiated, then also you can go for compounding. In both the case, you can go for compounding. Okay. Now, second, are there any offence under the Income Tax Act which are not compoundable? That's what I have told you. Under the revised guideline, all offences are compoundable. Under the revised guideline, all offences are compoundable. Whether it's an offence where there is a jail of 3 months or whether it is an offence where there is a jail of 7 years, 8 years, 10 years, it doesn't matter. You can go for compounding for all the offences. Is everyone clear with these two paragraphs? One by one, we will try to strike off the paragraphs once we understand the things. What will be the amount of compounding? That it will take some time to explain that. It will come on the last pages. Okay, please be patient. Is everyone clear till here? Tell me please fast. Yes? Now, first of all, what is the scope of this guideline? Step by step, step by step. Just after the initiation started or anytime after initiating. The law does not say. See, one of them, Chandu is asking a question, can I go for computing just after the initiation of prosecution, or I can go after few months also? You can go anytime. Anytime, provided the compounding order is not passed. Okay, you have to go before that. Okay, provided the prosecution order is not passed. Sorry, if the prosecution order is passed, then there is no sense of going for compounding. Okay, you can go for compounding anytime, even after initiation, but obviously before passing of prosecution order. Okay, now what is the scope of this guideline? Step by step, paragraph by paragraph, you have to talk. Huh? Don't be in a hurry, all of you. I am telling you. You have to give me confirmation of each and every page. You will not get a more comprehensive video on compounding on the entire YouTube. Some people have even completed this compounding in 10 minutes. I don't know how. It is absolutely impossible to do all these things in 10, 15, 20 minutes. It will take time for you to understand. It's a new concept. Now, the scope of guidelines to prosecution under the Income Tax Act. What is the scope of this guideline? What does this guideline covers? What all things are covered in this guideline? That's what the CBDT is trying to explain us. Let's see. This guideline shall come into effect from the date of issuance, that is 17th October 2024. As I've told you, it is applicable from which date? 17th October 2024, as I mentioned over here also. Okay, this is applicable from 17th October 2024. Does that mean that there was no compounding guideline earlier? There was a compounding guideline earlier also. But this revised guideline is applicable from 17th of October 2024 and applies to all compounding applications filed after this date. So whatever application you will file after 17th October will be coming under the revised guideline, will not go under the old guideline. Okay, and more important, as well as applications to which have been already filed earlier but not yet disposed of. So if there is any pending application on 17th of October, is it possible that there might be some application which you might have been filed in earlier guideline but not yet closed, but not yet solved, not yet completed? The compounding is not yet done. So all the pending applications which has been filed under the earlier guideline and which is pending on 17th of October will also come under what? Will also come under the new guideline. So sir, there is a question which comes to our mind. Whether the revised guidelines are applicable on pending application? Yes. All applications which are pending on 17th of October will now be governed as per the new guideline, not as per the old guideline. So are we supposed to make a fresh application for that, or are we supposed to make a fresh application payment of fee? No. It is not required to make a fresh application or any fresh application fee. Nothing has to be paid. Is everyone clear till here? Step by step you have to go. Is everyone clear till here? I will strike this off. Is everyone clear till here? Please tell me. So who can come over here? What is the scope of this guideline? The scope of this guideline is, if you are making the application for the first time after 17th October, you are welcomed. And you will be welcome under the new guideline. If you have made an application under the old guideline, but still on 17th October your matter is pending, so you will be automatically transferred to the new guideline. For that, there is no need to pay any application fee. There is no need to give any separate application. Are you clear? Please answer, otherwise I will go from here. I will not teach you. I will go. You watch the Hindi lecture then. Please. Yes, Kamleshwar Mishra. The next lot of easy notes will have all these things. Okay. Till now, whatever has been dispatched does not cover these amendments. Obviously, these have been come for in the last few weeks. The next lot of books will definitely have this for September and Jan 26. Okay. And for extra, one more thing that I would like to say, that this 35-page amendment I have just sum up in around 8 to 9 pages in the form of a summary. Okay, that summary also I have shared on the Telegram channel. You can check over there. Okay, our Telegram channel, you will get the summary also, so that on the day of examination you don't have to give that much time to this particular booklet. Okay, now, so what we have understood here till here we have understood that from 17th October, if you make an application, you have to make application under the new guideline. If you have already made an application earlier and it is pending, then you will be transferred to the new guideline without payment of any fee, without making any fresh application. Now, the next question which comes to our mind, pay attention. In case application under earlier guidelines were rejected, say in the earlier guideline I made an application and the department reject application for what? Application for compounding of an offense. So I made an application for compounding of an offense under the earlier guideline, and suppose that got rejected. Now solely on the account of curable defects, fresh application may also be filed. Now listen carefully. What do I mean by this? Every paragraph gives you great amount of knowledge, which will be helpful for us later on while solving the problem. There are some examples given by the ICAI over here. Suppose I filed an application in the earlier guideline, say in the month of January 2024. Now that application was rejected by the department. They said that no, compounding cannot be done because there is a defect in your application, curable defect. But curable defect means it's a minor defect. It does not have some major defect. Like they have defined curable defect. Curable defect means you have not paid any tax, you have not paid interest, you have not filled the form properly, you have not put the assessment year properly, you have not put the financial year properly. Such kind of small mistakes you have done. Okay, now listen carefully. This is also a beautiful point. So I made an application in the earlier guideline, which was rejected due to curable defects. Curable means some small mistakes I did, so they rejected. So if you have done curable defect, and because of curable defect, if that was rejected, so the government says that you can make a fresh application now. What you can do? You can make a fresh application here. Fresh application may also be done over here. But, if you have made an application in the earlier guideline, and if it was rejected, not due to curable defect, but on merit it was rejected, because you are a hopeless assessee, you are a habitual offender, you have done offense multiple times. That is the reason they have rejected your compounding earlier. So in that case of rejection, if the rejection is not due to curable defect, but the rejection is on merit, then you have no right to come back to what? To make a application. Okay. Applications rejected in the past on merit by the competent authority shall not be reconsidered under the revised guideline. Is everyone clear with this? Please tell me. Please tell me. I cannot go ahead without you guys answering. I'm not teaching to walls. I'm teaching to humans. Please answer, my dearest student. So if my application was rejected earlier due to genuine reasons, I can go for what? Reapplication. But if my application was rejected on merit, then I cannot go for what? Reapplication under the revised guideline. Is everyone clear? Next, step by step, paragraph by paragraph. Can I strike off this paragraph now? Are we done? Are we understanding this paragraph? Yes, we have understood this. Now next paragraph. Let's see. Whether the applicant whose application was rejected in earlier guideline on the ground of being convicted is eligible to reapply for compounding as per the revised guideline. See, in the earlier guideline, I made an application. Okay. In the earlier guideline, I made an application. The officer rejected my application. The officer said that you will not be subject to what? Compounding, because you have been convicted earlier in some other case. Okay, convicted means what? I have been found guilty. The court has passed an order that I am guilty of this offense. That means I am convicted. So because I am got convicted in some other application, that cannot be the reason for the rejection. Okay. So for that, yes, in case the rejection was solely on account of conviction without examination of merit as per any of the earlier guidelines, such applicant can reapply in terms of the revised guideline. Okay, so that's what they are trying to say. They are trying to say only this thing. Okay, so if your rejection was on merit, if the rejection was on merit, then you cannot come for reapplication. If the rejection is because of genuine reason, you can definitely come. Okay, so this is the scope of what? Scope of compounding compounding. So let's summarize the scope first. Who can come? All those can come over here. First of all offenses are compoundable under the new guideline. There is no exception for the offense. All the offenses are compoundable under the new guideline. First thing. Second, from 17th October 2024, if you are making an application, you are welcomed. Okay? New application. If you have already made an application, it is pending, your case will be transferred to the new guideline. If you have made an application earlier which was rejected because of curable defect, you can come. Because of merit it was rejected, doors are closed. I hope it is clear to all of you. Now let's go ahead to the next point. Point number 2. What are the conditions for consideration of compounding application? Now there are a lot of conditions that we have to fulfill for compounding. The very first condition is you have to make an application for compounding. Okay. So now we need to understand who can make application, how application will be made, what will be the application fees, to whom application has to be made, by when application has to be made, what is the time limit for application, multiple things has to be understood over here. Shall we start? Please tell me. Shall we start? Let's start now. Pay attention. Conditions for compounding. First condition, application. An application for compounding is made to whom? It is made to 4 authorities. Jurisdictional Principal Chief Commissioner, Chief Commissioner, Principal Director General and Director General, and these authority will be called as a competent authority. What they will be called as? They will be called as a competent authority for compounding. Okay, so the first paragraph is very simple. It talks about to whom application has to be made. Second is very important paragraph. This terminology is going to come again and again. Second paragraph. The compounding application may be filed for offense pertaining to one financial year in case of a taxpayer. So if I am a taxpayer, if I am a tax defaulter, I will file application for 1 year. Or I can file application for 1 quarter in case of tax deductors. Okay? Okay? So if I have not paid tax properly, etc., then I will be called as a taxpayer. If I have not deducted tax properly, then I will be called as tax deductor. So taxpayer can also file an application. Tax deductor can also file an application. Now, you can file a taxpayer will file application for 1 year tax because you file income tax return for 1 year, and tax deductor will file application for 1 quarter because you file TDS and TCS return for 1 quarter, not for 1 year. So you can file application for 1 year or 1 quarter, or you can file for multiple year or multiple quarters together. So I can file application for say 2020-21. That will be called as a single application. But if I file application for 21-22, 22-23, 23-24 for 3 years together, that will be called as consolidated compounding application. What it will be called as? Please tell me. Consolidated compounding application. So the application can be of 2 types. So if you have done offense in only 1 year, then you will file 1 application. If you have done offense in multiple years, then you will consolidate all of them together and you will file 1 application for all the 3 years, 4 years, 5 years, for whichever years you have done. You have done what? You have done the offense. I hope it is clear to all of you. Now, if there are more than 1 rejected application under the previous guideline, okay, so in the previous guideline you have made 5 applications, all of them are rejected, okay, then for all the 5 rejected guidelines, you will file 1 consolidated application may be filed for all such previous application. I hope it is clear to all of you. First of all, in the previous guideline, if there is an application which is rejected, can I file an application in the new guideline? Yes, if it was rejected on what? On curable defect. So there are 5 applications which I have filed earlier. All of them were rejected because of curable defects. So for all 5 applications, I have to file 1 consolidated application now. I will not file 5 applications now. For all the rejected applications under the earlier guidelines, you have to just file 1 consolidated application for all 5 of them. I hope it is clear to all of you. Now, based on that, there are some FAQs over here. Let's try to answer that. Whether the applicant can withdraw a compounding application. Can you withdraw an application? Once you make an application, I want to withdraw now and file a new application. Sir, why do you want to withdraw first of all? Maybe I have done some mistake in the application, so I'm withdrawing and I'm refiling. So can I do so? The applicant can file a new single application or consolidated application after withdrawal of earlier application. Yes, you can withdraw. There is no harm in that. But such new application shall be treated as a subsequent application. It will be treated as a second application. And later on, we are going to see that for second application, there is a higher compounding rate. Generally, in the law, it is mentioned later on that if you come for the first time for compounding, then you will be charged with normal charges, normal compounding charges, say 1 lakh rupees. If you come for the second time, then it will be 1.2, that is 1,20,000. Amount I am just saying for the sake of example. Exact amount we will try to find out later on. If you are going for compounding for the first time, say 1 lakh rupees. The subsequent application, 1.2 times, 1.2 lakhs. Third application, 1.4. Fourth application, 1.6. Fifth application, 1.8. Sixth application, 2. So it increases by 20% every time. So therefore, if you want to withdraw the application and make a subsequent and make a fresh application, you can do so. But that will be considered as what? As a subsequent application, and higher compounding rate will be applicable on you. Second, whether applicant is required to file compounding application for all offences together for which prosecution proceedings has been initiated. Say, I have done 5 mistakes. How many mistakes? 5. I can apply for one offense, I can apply for 2 offense, I can apply for 3 offense, I can apply for 4 offense, or I can apply for all 5 offense. That is my choice. There is no need. It is not necessary that if I have made 5 mistakes in a financial year, then I should go for compounding of all 5 of them. Not necessary. That is your choice. Suppose I have made 5 mistakes. In one of the mistake, there is a prosecution of 10 years. In another mistake, there is a prosecution of say 8 years. In third mistake, there is a prosecution of 7 years. In fourth mistake, there is a prosecution of 5 years. And the fifth mistake, there is a prosecution of just 1 month. So maybe I may not go for compounding for that 1 month prosecution, because that is a very small period. It is not mandatory that you should go for compounding for all the offenses. You have a choice. Whichever offense you want to compound, you can write in the application. Whichever offense you don't want to compound, you may not write in the application. That is absolutely your choice. That's what it is written over here. No, the applicant may apply for one or multiple offense in an application. His application cannot be rejected on the ground that he has not applied for particular offense for which notice for prosecution has been issued and the proceedings are under progress. There is no need. Next, is there any limitation as to number of times compounding application can be filed? No. You can file compounding application for n number of times. There is no limitation of number of times you can go for compounding. You can go for n number of times. But if the department finds that you are an habitual offender, you are again and again coming, every year you are making a mistake and you are coming to compound, making a mistake, coming to compound, making a mistake, coming to compound, then your application will be rejected. By default, there is no restriction on number of times you can go for compounding. I hope it is clear to all of you. So I will just sum up this discussion with you all. What is the discussion about application? You will make application to whom? To 4 authorities. Those 4 authorities will be called as the competent authority. Second, you will make application for 1 year, which will be called as single application, or 1 quarter, which will be called as single application, or multiple years or multiple quarter, which will be called as consolidated application. Now, if in the previous guideline, there are more than 1 applications were rejected, then for all the applications, you have to file only 1 consolidated application. Okay. Next, if you withdraw the application, you can withdraw and you can file subsequent application, but it will be treated as second application and higher compounding charges will be applicable to you. Next, it is not necessary that you should file compounding for all the offense. That is your choice. And last, you can go for compounding for n number of time. Is everyone clear till here? Please tell me. I will not go ahead unless and until I get confirmation from you all. Please. Absolutely within the flow. It's easy, don't worry, it's easy. Now, what is the time limit for filing application? Okay, let's see. The compounding application. Compounding application means single year application, correct? Single year application. Or consolidated compounding application. Consolidated compounding application means multiple year or multiple quarter application. What is the time limit for filing application? It may be filed suo motu at any time after the offense is committed. So whenever your offense is committed, you can file an application, irrespective of whether it comes to the notice of department or not. Okay. So even if it, as I've told you at the beginning of the guideline only, even if it comes to the notice of the department, you can go for compounding. Okay, you can go for compounding even after initiation of the proceedings. Correct or not? The officer has launched prosecution proceedings. Still, you can go for compounding. This is one of the best things that is available over here. The compounding application or the consolidated compounding application may also be filed after launch of prosecution proceeding, right? So this is what this paragraph wants to tell us. Very simple paragraph, nothing great as such in this paragraph. Is there any time limit for filing an application? No, there is no time limit. You can file any time before, you can file after committing the offense also, you can file after starting the proceeding also. Okay, there is no time limit. Now, what is the compounding application fee? Let's see that now. If you want to do compounding, you have to pay some fee. Some application fee has to be paid. Now, pay attention. This is very important paragraph now. Okay. What is this application fee? This application fee is to give, it is just like registration. Registration for what? Compounding. Don't misinterpret this as a compounding charge. Huh? This is not compounding charge. Compounding charge will be determined by the competent authority later on, depending upon your offense. This is just an application fee for compounding, for initiation of compounding. Okay. Don't merge this with the compounding charges. Compounding charges will be very higher as compared to this amount. Now, what is the application fee? How much I am supposed to pay, sir, for compounding application? A consolidated compounding application filed on after 17th October 2024. The applicant has to deposit non-refundable compounding application fee of 25,000 for single compounding application. So for single application, it means for 1 year. For 1 year, it is 25,000. And for consolidated compounding application, it is 50,000 rupees. Is it clear? If you are making an application for 1 year or 1 quarter, 25,000. For multiple years, consolidated compounding application, 50,000 rupees. But the next line is very critical. I want you all to answer whether you have understood this next line or not after I explain this. The said fee is non-refundable, but it is non-refundable. This 25 and 50,000 is non-refundable, but it is adjustable against applicable total compounding charges decided by the competent authority, if any. Say I paid 25,000 rupees as a application fee and I went for compounding. Now the officer is saying that the compounding charges are 10 lakh rupees. So I have to pay 10 lakh rupees to compound my offense so that I should not go to jail. Now while paying that 10 lakh rupees, I can adjust this 25,000 rupees and I will pay only 9,75,000 rupees. Is everyone clear with this concept? Please tell me. Only then I can go ahead with the FAQs. Is everyone clear with this? So you can set off this particular compounding charges, application fee against your compounding charges, which will be determined later on. Okay. Now, there are some FAQs which are raised over here. Okay. What is the FAQ? The first FAQ is very important. The second one is something which we have done earlier. Okay, we have done earlier that we have done that discussion of curable defects and all, etc. Whether compounding application fee is adjustable against compounding charges payable? Yes, it is adjustable. As mentioned over here, it is adjustable. But the compounding fee is adjustable, but only against compounding charges payable for the offence sought to be compounded in a particular application. It is only adjustable against the same offence for which you have made an application. Okay. For example, the offence is X. Okay. So you paid compounding fee for X. Now the compounding charges are only adjustable against the compounding fee paid for X. Now this fee paid for X cannot be adjusted against compounding charges of offence Y. Cross set off is not allowed. Did you understand? Please tell me. Very important point it is. So if I paid compounding fee for offence X, I can only set off that against compounding charges of offence X. I cannot set off that against compounding charges of offence Y. Are you clear? I hope it is clear. Yes, this is what it is written over here. Now, the next paragraph is something which we have discussed earlier, nothing great as such. Whether compounding is allowed if the application for such an offence was previously rejected. Yes, we know that if it was previously rejected, then you can go for it. If so, whether separate applications needs to be filed for more than one application. As I've told you, if more than one applications are rejected in the previous guideline, what will you do? You will file a consolidated application, correct? Yes. But that is only possible if it was rejected on curable defects grounds. If it was rejected on merit, then you cannot come. So that's what they have said over here. Okay. And you have to, if more than one application was rejected in the previous guideline, you have to file one consolidated application, and for that you have to pay 50,000 rupees consolidation fee. Okay. I hope it is clear to all of you. Now let's go ahead with the next paragraph. I have one question to all of you. In the process of this compounding, what is the benefit to you? The only benefit to you is you are not going to go to jail. My question to all of you is, because of compounding, are you going to be relieved from payment of taxes, interest and penalties and other dues? Tell me please. Because of compounding, are you going to be relieved from payment of taxes, interest, penalties and other dues? And the answer is a big no. This revised guideline is not to give you relief in these cases. This revised guideline is only to give you relief in case of what? In case of prosecution, not other things. So other things you have to pay before compounding is done. That's what it is written over here. All outstanding tax, interest, including interest under section 220, penalty or any other sum due relating to offence for all the relevant year or quarter for which compounding has been sought is to be paid before making the compounding application. So the first paragraph says that you have to pay all your dues before making compounding application. Are you clear? I hope it is clear to all of you. So first pay all the tax, all the interest, all the penalty, everything, and then make a compounding application. Now suppose you paid all the tax, all the interest, all the penalty and made an application to the department. Okay. Now the department will obviously verify whether you have paid everything or not, and if there is any demand found, then the department will give you an opportunity to pay that demand within 30 days. They will intimate you. Okay. So they will intimate you and they will tell you, sir, this much demand is pending in your case, please pay off this. They can also extend the period of 30 days to another 3 months. Okay, up to 3 months they can extend that. Now, the compounding application shall be considered valid only after all the payment has been done for the respective year or years. So what does these two paragraphs tell us? Paragraph by paragraph we are going to talk. These two paragraphs tell us that before going for compounding, pay all your tax, pay all your interest, pay all your penalty, pay all your dues, and then make a compounding application. Once you make the compounding application, after all the payment, the department will verify that. And in case they found any demand, they will intimate you to pay within 30 days. They can also extend it up to 3 months. Once you pay all the dues, only then you can go ahead with compounding. Otherwise, it cannot go ahead. Okay. I hope it is clear to all of you. Next, you have to give undertaking. That undertaking has to be given by the applicant that I undertake to pay the compounding charges which will be within the stipulated time frame. Obviously, after the compounding is done, the officer, the competent authorities, the 4 authorities will give you the amount to be paid. That this much amount has to be paid by you. So you have to give an undertaking that whatever amount they will determine, I will pay within the stipulated time. So this is an undertaking that the assessee has to give. Next, withdrawal of appeals. Now listen carefully. You cannot say that please compound my offense, but I will challenge that matter in the court. That is something which is very foolish, which looks very foolish. That there is an offense for which you are going for compounding. You are telling the department, I am ready to compound that offense, don't put me in jail, but I will challenge that in the court also. You cannot do both the things together. You have to withdraw the appeal. The appeal has to be withdrawn. But, what if the appeal has mixed grounds? Suppose in the appeal, there are matters which are subject of compounding and there are other matters also. In an appeal, there can be multiple grounds of appeal, right? So there are 5 grounds on which I have appealed, out of which 2 grounds are similar to what I have gone for compounding, and 3 grounds have nothing to do with compounding. Then how will I withdraw the appeal? In that case, you will not withdraw the appeal. You will only withdraw that ground. Okay. You will only give an undertaking what? To withdraw that particular part of the appeal. That whatever portion of the appeal is subject to compounding, I don't want to appeal that portion. Is everyone clear with this? Please tell me. So which appeal you will withdraw? Only that portion of the appeal which you will withdraw, which is subject to compounding. That portion of the appeal which has nothing to do with compounding, that will continue in the with the appellate authority. Is everyone clear? Please tell me. Great. Now, consolidation of offenses. Now, what is this? What is consolidation of offenses? It's a small thing, nothing great as such. Any application for compounding of offense under 276B or 276BB. So, what is 276B and 276BB? 276B, we will come to that. Kokila. Yes. Kokila has asked a question. I have a doubt, sir. Does the provision anywhere say that we can ask for an extension of payment of time to pay the compounding charges? Yes, there is an extension which will come in the subsequent pages. Okay, don't worry. So there is an extension for payment of compounding charges which is given by the law. It will come. It will come. It is a part of our discussion. Okay. It can be extended up to 24 months. I'll come to that discussion in next few minutes. Now, what is 276B and 276BB? It talks about if you don't pay the TDS or TCS on time, then there can be a prosecution under 276B and 276BB. Now, what is this consolidation of offense? What does this mean? Let's read. Any application for compounding of offense under 276B or BB by an applicant for any period for a particular TAN should cover all defaults constituting offense under 276B or BB in respect of that TAN for such period. So the law says that in case of TDS default, you have to make a application for all the defaults. See, unlike normal cases, if I have done 10 offenses, I have a choice to go for compounding for 5 offenses. I have a choice not to go for compounding for another 5 offenses. But in case of TDS default, if you want to come for compounding, come for all the offense for that quarter, or else don't come. You cannot be selective in case of TDS. Okay. This is what this particular paragraph wants to tell us. Now, Next paragraph talks about revival of defective application. So if you have given a defective application, is it possible to do revival? Some curable defects have been done by you. You have made an application, and in the application you have mentioned wrong financial year, you have not filled the application properly, or you have not paid the tax or interest or penalty. You might be knowing that before going for compounding you have to pay all the taxes, otherwise department intimates you to pay within 30 days. They give you extension of another 3 months. So if you have done some curable defects, then you can revive your application. Okay, the department will intimate you and you have to rectify the defect. The application which do not fulfill any of the specified conditions or are not acceptable due to curable defects such as this, these are all curable defects, shall be treated as defective under these guidelines and shall not be proceeded with. So it will not be proceeded with. Your defective application will not be proceeded. For that, what am I supposed to do? I made a defect, I made a mistake, it's a curable mistake. What shall I do? Such application can be revived without additional payment of compounding fee. You don't have to pay any fee. You have to just rectify your mistake. Provided the defects are cured, you have to just rectify the mistake. That's it. You don't have to pay anything to rectify the mistake. Within a period of 1 month from the date of intimation of the defect. Okay. So within 1 month from the date of intimation of the defect, you have to rectify that. In case the defect is not cured within time, the defective application will be returned back to the applicant. They will return back the application. So what is this discussion all about? This discussion is about, say for example, you have made an application and in that there are some curable defects. The department will intimate you that please rectify this curable defects within what? Within 1 month. You don't have to pay any compounding fee for that. No need to pay any application fee. Just rectify it. Okay. But if you don't rectify within the time allowed, which is how much time given over here? 1 month. Then the application will be returned back to you. What do I mean by returned back? It means now if you want to file an application, you have to file a further application. It will be considered as a compounding subsequent application and higher compounding charges will be applicable to you. 1.2, 1.4, 1.6. Are you clear? Please tell me. So what is the concept of revival of defective application? If there is a defect, department will intimate you. You have to rectify the defect within 1 month. If you don't rectify the defect within 1 month, then they will return back. Now, if you want to come back again, you can come back, but with a higher what? Compounding charges which will come later on. Are you clear? And application fee also has to be paid because this will be considered to be a subsequent application. Okay. So to rectify a defect, there is no need to pay anything. But if you don't rectify, now if you are coming for the second time, you have to pay 25,000 or 50,000 once again. Are you clear? I hope it is clear. Now, coming to the next discussion. Next discussion is very simple, nothing great as such. And there are some FAQs over here, okay, which talks about that. What is the next discussion? The next discussion talks about that there are some offenses which can be compoundable only with the approval of the CBDT chairman. There are some offenses which are only compoundable with the approval of what? Chairman of CBDT. If the CBDT chairman gives you approval, then only the principal chief commissioner, principal commissioner, director general or principal director general can compound the offense. Otherwise, they also don't have the authority to compound the offense under these cases. So what are these cases? Suppose if you have been convicted for 2 years or more, with or without fine by court of law. So you are a seasoned player, you are a serial offender. The first 2 points talk about that only. If the SSC has been convicted earlier for 2 years or more, now if you are coming for compounding of your application, your compounding application will be considered. But only it will be done if the CBDT chairman gives an approval, otherwise not. Third point, if you are found to be in any anti-national activity or terrorist activity. So if you have done any anti-national or terrorism activity, it is against the nation, then the competent authority will consult with relevant agency and will decide whether this case is a deserving case for compounding or not, and then they will take an approval from the CBDT chairman, and only then it is allowed to what? It is allowed to be compounded. So if you have done some anti-national terrorism activity, then the competent authority will first talk to a relevant agency. We'll take the inputs of the relevant agency whether we should go for the compounding of such kind of people or not. If they say no, they have done a mistake, they have accepted their mistake, they have faced all the consequences. Now they are not doing any mistake for the last few years. So let's talk to CBDT chairman and let's go for compounding. So first the competent authority, in case of anti-national and terrorist activity, first the competent authority will consult an agency and then it will go towards CBDT chairman. Next one is very important. If a chartered accountant, lawyer, etc. is helping a client evade tax, a chartered accountant is saying the client that you evade the tax, I will take care of it. So in that case, in case of a chartered accountant who is provoking others to do tax evasion, so in that case, the chartered accountant will also go to jail. A prosecution will also be launched against chartered accountant also. So if a prosecution is launched against chartered accountant or lawyer who is provoking others to evade tax, in that case also compounding is not possible without the approval of CBDT chairman. CBDT chairman approval has to be taken, only then compounding will be done. And the last two cases over here is, if there is an offense under the Black Money Act or if there is an offense under Benami Transaction Act on you, you have done some offense under the Black Money Law or under the Benami Transaction Act, CBDT chairman approval is required to do compounding. And last but not least, if you have done an offense under 275A or 275B, sir, what is 275A and 275B? 275A talks about deemed seizure. You remember in search and seizure, we have done one provision of deemed seizure, which talks about that if it is practically not possible for the officer to take away the bullion, jewelry or any other asset because of its physical nature, because of its characteristic, because of its dangerous nature, then the AO will pass an order to the assessee and will tell the assessee you should not use that or otherwise sell without approval of the assessing officer, and it will be called as deemed seizure. So if you violate that deemed seizure, then you will be prosecuted under 275A, sorry. And while search, if you do not help the officer, search is going on and the officer is asking for books of accounts, electronic records, password, and you are saying that I don't have password. So if you are not facilitating the officer, then the department can impose what? 275B against you. There is a prosecution of 2 years. So in these two cases, if you want to do compounding, you can do compounding, but only with the approval of CBDT. Now, one doubt, do we have any compounding concepts in our previous syllabus or is it new guideline? No. In the previous syllabus, compounding concepts are there, but compounding concepts are not there. Offenses are there, but guideline was not there in the syllabus. Okay. As I've told you earlier only, the old guideline was not there in the syllabus. Okay. But the new guideline they have introduced in the syllabus because it is recently introduced. So it might be helpful in practical life. That is the reason they have introduced it. The old guideline is also there in practical life, but for exam, it was not there. Okay. So you don't have to worry about it. So the next two questions are something which we have already discussed in the discussion. These are same as what we have done in the discussion. Now coming to authority competent to compound. Who will do the compounding? Okay. Let's see who will do the compounding. There are 4 authorities who have been given the charge for compounding. Who are the 4 authorities? Principal Chief Commissioner, Principal Director General and Director General of Income Tax. Right? These are the 4 authorities who have given the authority to do compounding. Okay. Yes, in these cases, in these special cases, these 4 authorities have to take the approval of the chairman of CBDT. They cannot directly compound the offense. Now, in case of TDS, TCS, what happens? I will explain you with the help of example. In case of TDS, what happens? Every branch is considered to be a separate assessee. Every branch. Suppose there is a Mumbai branch of my company and there is a Delhi branch of my company. Now, Mumbai branch has not deducted TDS, has not paid TDS. So, there is a prosecution launch against Mumbai branch. Now, Delhi branch has also not paid TDS. So, there is a prosecution launch against Delhi branch. Now, the Mumbai branch is also making an application in Mumbai to the jurisdictional principal chief commissioner for compounding, and the Delhi branch is also making an application in Delhi for the jurisdictional principal chief commissioner or principal commissioner or director general, whatever it is, for compounding. Now, the question is, the law says over here that in case of TDS, TCS, if multiple applications are made in different branches, then wherever the TDS is higher, the case will be transferred to that branch, and that branch will take care of the entire compounding of offences. So if I made an application for compounding in Mumbai branch regarding my TDS payment, and also in Delhi branch regarding my TDS payment, now two compounding proceedings will not run parallelly. No, it is not allowed. It is not that Mumbai branch will conduct one compounding proceedings and Delhi branch will conduct one. No, it's not like that. Even if you have made two applications, wherever the TDS amount is higher, to that respective branch, the other branch officer will transfer the case. This is what it is written over here. Wherever TDS is higher, transfer the case to that jurisdictional commissioner. Is it clear? I hope it is clear to all of you. Now we will come to the compounding procedure. Okay, the procedure is very simple. There is nothing great in the procedure. And one of the doubts which has been asked by, say, Kokila, you have asked, I guess. So that doubt will be addressed over here. Okay. Now the compounding procedure is very simple. You made an application to whom? You made an application to 4 authorities: principal, chief commissioner, etc. Now those 4 authorities will tell the assessing officer, to submit a report. So you made an application to 4 very big authorities. They will tell the assessing officer to submit a report. Okay. This is what it is given in the first paragraph. Okay. Based on that report, the assessing officer will give the report to these 4 authorities. Based on that report, these 4 officers will pass an order if the application is not acceptable, or if the application is acceptable. If it is not acceptable, they will pass an order that we cannot compound your offense. We are passing an order within 2 months from the end of the month in which of the receipt of application, as far as possible. The moment they write the word as far as possible, it means it's a recommendatory time limit. It is not a mandatory time limit. Okay. So try to understand the procedure. I gave the application to the 4 authorities. They asked for a report from the assessing officer. The assessing officer gave the report to the 4 authorities, competent authorities. The competent authority rejected my application. They have to do that within 2 months from the end of the month. The second possibility is the competent authority has accepted my application. Now, if they have accepted my application, then they will tell me, they will intimate accordingly to me that your application is accepted for compounding, and they will ask me to pay compounding charges payable and other pending liabilities, and such intimation may be issued within 2 months from the end of the month of the receipt of application, again as far as possible. So whether they want to reject an application or whether they want to accept an application, they will do within 2 months. Is it clear to all of you? Please tell me. Next, once my compounding is acceptable, I will go ahead. What is the time limit for payment of compounding charges? The time limit to pay compounding charges is 1 month from the end of the month of the receipt of such intimation. So whenever they will intimate you that this is the charges, you have to pay within 1 month from the end of the month of the receipt of intimation. Okay. So what is the procedure? The procedure is very simple. First, you will make an application to the authority. The authority will send the application to AO and will ask the AO to submit a report. Based on that report, they will reject your application within 2 months, and then prosecution will be launched on you. Or based on that application, they will accept your application. Based on that report, they will accept your application. If they accept your application, then again within 2 months, they will pass the order. They will accept your application and they will ask you to pay the compounding charges and other liabilities. And that you have to pay within 1 month. Can that be extended? The answer is yes. What is the extension time limit over here? Check. It can be extended up to 6 months. Up to how much? Up to 6 months by the competent authority under exceptional circumstances. Can that be further extended? Yes, it can be extended up to 12 months. But now They have to take prior approval of Principal Chief Commissioner. Can that be further extended? Yes, it can be extended up to 24 months also, but now they have to take approval of chairman of the CBDT or the member of CBDT. After 24 months, it is not possible to what? It is not possible to extend. Is everyone clear till here? Please tell me so that I can go ahead. Please tell me. Shall I go ahead? Let's go ahead now. Now, rejection of application on non-payment of compounding charges. Obviously, if you don't pay the compounding charges within the time allowed or the time extended, what is the time allowed? Time allowed is 1 month from the intimation. So, whenever they will intimate you, you have to pay within 1 month, or the extended time is up to 24 months. If you don't pay, then your application will be what? Rejection. Rejection will be done and the prosecution proceedings will be launched against you. Okay? The department will launch a prosecution proceeding against you, obviously. Now, what is the time for the department to pass a compounding order? What is the time to pass? The order has to be passed now for compounding. Yes? See, it is very simple. I'm telling you one simple point. Listen carefully to my point, okay? How will the assessee get convinced that the compounding is done? What is the document based on which the assessee can say that now my compounding is done? Now I don't have to go jail for this offense at least. I will not go to jail for this offense at least. I will get convinced only if I get a compounding order from the officer. When will I get convinced that the assessment is done? Only if the assessment order is passed. When will I get convinced that the appeal is done? Only when the appeal order is passed. Similarly, when will I get convinced that the compounding is done? Only if the compounding order is passed by the department. Yes or no? So, what is the time limit for compounding order to be passed? Where the payment of the compounding charges are made within the time allowed or extended time. First, the payment of the compounding charges has to be paid. Whatever compounding charges are determined by the competent authority, that you have to pay first. For example, you have paid that. Then the compounding authority shall pass the compounding order within 1 month from the end of the month of the payment of total compounding charges. So within 1 month, they will pass the compounding order. So if I paid the charges in the month of July, so they will pass the order by 31st of August 2025. Now, one very important point mentioned over here. Pay attention, please. Be very careful. One important point mentioned over here is the department says that before passing the compounding order, please expeditiously means very fast, on priority, complete the penalty proceedings. Because you are not relieved from penalty, you are relieved from what? Going to jail. So if there is any penalty proceedings pending in respect of the same offense, complete the penalty proceeding at an earliest. Check it, please. In case proceedings to impose penalty related to the offense sought to be compounded are pending at the time of filing of compounding application, such proceedings should be concluded expeditiously, and the demand related to penalty, if any, should be recovered before issuing of compounding order. So, if there is any penalty proceeding, complete that penalty proceeding, recover the demand of the penalty before passing the compounding order. I hope it is clear to all of you. So, this is an internal instruction to the department people. This is not for us. Okay. Now, this next paragraph is a beautiful paragraph. This has some relevance. This has some background which I need to explain you. Suppose I am an NRI, I am a non-resident. Okay. Now, generally what happens, NRIs do not come for compounding. Why? Why they don't come for compounding? They don't come for compounding because they have to report in their respective countries that if you have done some offense in India, then you have to report over here. Okay. If they come for compounding, it means they are admitting that they have done an offense. Yes or no? And if they are admitting that they have done an offense, they have to report in their respective country and they might face problem in their country. Suppose I am staying in UK, I am an NRI. Now in UK, while filing the income tax return, I have to report that if I have some offense pending, if I have done some offense in India, I have to report that in the ITR in UK, which the person staying in UK do not want to do. They don't want to spoil their image in United Kingdom. So for that purpose, they don't for compounding. Because compounding, if you come for compounding, then you are yourself saying that I have done a mistake. Please spare me from this by taking a charge. So the government has said the officers that you have to put a line in the compounding order. Whenever a compounding order will be passed, now you will find this line over there. Now what is this line? Read it. The officers are instructed to put this line in the order. The compounding order is intended to resolve the offence under section 279 of the Act and should not be construed as an admission of an offence by the applicant. Okay. So now in the foreign country, associate don't have to mention that they have done some what offence. They are not admitting their offence. It is just to resolve an offence. It does not mean admission of an offence. Let's read this. Taxpayers, particularly NRI, avoids opting for compounding due to misconception that it constitutes an admission of offence, which could affect their reporting obligations at various statutory and international forums. Now, to address this misconception and encourage taxpayers to seek compounding, it is directed that the compounding competent authority has to include the following paragraph. What is this paragraph? That which I have read just now. That compounding is intended to resolve conflicts. And it does not mean that you are admitting your offense. Okay, you have not done any offense, don't worry. You are just trying to resolve an offense. Okay, I hope it is clear to all of you. Last but not least, over here, there is no mandatory time limit to process application. Yes, to process application, there is a recommendatory time limit, not mandatory time limit, which I have already told you in the previous paragraph also. Right, because everywhere they are writing what? They are writing wherever possible, as far as possible, as far as possible. Now, based on this, there are some questions over here, okay, which we have already covered. All of them we have covered. You don't have to worry much about it. All these questions are already covered in our discussion. So, you don't have to worry much about it. Okay, we have done all these things. So, don't think much about it. Just one question is important over here, that our extension for payment of compounding, this is new. Our extension for payment of compounding subject to interest or additional charge? No. Extensions are not subject to any kind of interest, any kind of additional charge. No interest or additional charge are applicable on extension allowable under the guidelines. Further, for cases pending as on the date of issuance of revised guidelines, additional compounding charge shall not be applicable and compounding charge shall be determined as per the revised guidelines. So, for cases which are pending on 17th of October 2024, which will be shifted to the new guideline, so no charges for them. We all know that there is no separate application fee for shifting the case from old to new, which are pending on 17th October. You just have to consider that in the new regime, in the new revised guidelines, and everything will be determined as per the new guideline. Now, one last thing, but the most important thing. This paragraph is the most important thing for us. If we can understand this paragraph, believe me, we are done. We are done with compounding. After that, there is nothing read. Only the questions have to be done over here, which is a practical question which is given over here. Okay. So we are going to start with compounding charges. Now, before that, you just give me 2 minutes. I'll come. Now, let's talk about the most important part over here, that is the compounding charges. Sir, what are the compounding charges over here? Pay attention, please. For the purpose of compounding charges, the word tax, first of all, what is the definition of tax over here? The definition of tax includes tax, surcharge and cess. It does not include interest as per the first paragraph. So for compounding, finding out the compounding charges which has to be paid by the assessee, tax will include the basic tax plus surcharge plus cess. It will not include the interest amount. Okay, be very careful. Second paragraph, paragraph by paragraph, every paragraph you have to understand very carefully, please. The compounding charges for the first compounding application. First, when you make the first compounding application or consolidated compounding application by the person, has to be computed for each offense disclosed in the application. Now, what do I mean by this? Suppose this is my application. Pay attention on the board. This is application for financial year 2021-22. Now, I am making an application, and in this application, I am going for compounding for 3 items. I have made one mistake in section 276B. Second mistake I have made in section 276BB. Third mistake I have done under section 275A. Now, the law says that there are 3 offenses which you are planning to compound for this year. Now, the officer will find out compounding charges for all 3 of them separately. There will be some charge for first offense. There will be some charge for second offense. There will be some charge for third offense. Okay. So, for every offense, he will determine separate compounding charge amount, and you have to pay that. This is what this paragraph wants to tell us. Let's read. The compounding charge for the first compounding application or consolidated compounding application by a person has to be computed for each offense disclosed in the application. So, the compounding charge will be determined for each offense disclosed in the application. Offense 1 disclosed in the application, find out the compounding charge. Offense 2 disclosed in the application, find out the compounding charge. Offense 3 disclosed in the application, find out the compounding charge. For all 3 of them, you have to find out the compounding charge. Okay, I hope it is clear to all of you. Now, this they are talking about the first compounding application. Okay. For first compounding application, normal charge will be computed. Now, one very important question which will come to our mind. Sir, how much will be the compounding charge? That I don't know. That depends upon case to case. That depends upon the offense. That will be determined by the competent authority. Okay. As per a guideline. That is not in your syllabus. That guideline is not in your syllabus. Okay. That how they will determine the compounding charge. That depends upon offense. If you have done a big offense, then higher compounding charges. If you have done less offense, then lower compounding charges. That I don't know. That can be any amount. 1 lakh, 2 lakh, 5 lakh, 10 lakh, 20 lakh, 1 crore, 2 crore. Any amount can be there. We are not interested in this guideline in determining the amount. Determining the amount is not our job over here. That is a job of the competent authority. So again, I am saying, when you are filing the first application, you will be charged with normal rate. What is the normal rate? That will be determined by the competent authority. Suppose that is 10 lakhs, for example. Okay. Now, for any application filed subsequent to first application. So, after first application, if you are filing the second application, shall be counted as second, third, fourth compounding application or consolidated compounding application. Okay. Now, what is the impact of that? I filed a first application under 276B. I filed first application. Listen carefully. I filed first application to compound my offense under 276B. Now, I am finding second application to compound same offense for a different year. This is for 2021. This is for 21-22. Pay attention on my example carefully. I am making first application to compound my offense under 276B for 2021. This will be considered as first application. I am doing second application. In first application, I will be charged with normal rate, whatever the officer will determine. Say it is 10 lakh rupees. Now, if the second offense is also similar to the first, then it will be considered as a second offense, second application. Suppose if the second offense is under 276C, then it will not be considered as what? As a second offense. Then it will be considered as a first offense only. It will be considered as a first application only. Okay. I hope it is clear to all of you. But here my first offense was 276B. My second offense is also 276B. So this will be considered as a second application. But if this second application, if this would have been 276C, then this will not be treated as a second application. This will be treated as a first application only. To treat an application as a second application, the offense has to be similar. And what is the impact of second application? The compounding charges will increase to 1.2. In the third application, 1.4. In the fourth application, 1.6. Let's read the next paragraph. Furthermore, if a person applied for compounding of an offense, the type of which was applied for earlier, it means the compounding application is for similar offense, then compounding charges for subsequent offense shall be 1.2 times, 1.4 times, 1.6 times, and so on. I hope it is clear to all of you. I'll explain you with the help of example once again. My first application is to compound 276B. My second application is to compound 276B. Then in this case, this will be considered as first application. This will be considered as second application. Here I will be charged with normal rate, and here I have to pay 1.2 times of the normal rate. Are you clear? But if my first application is 276B and my second application is on 276C, then this will be considered as first and this will also be considered as first. In both the cases, I will be paying normal compounding charge, not inflated one. Did you understand this point first of all? Otherwise, I cannot go ahead. All of you have to answer me this, please. Please answer. Okay. So if you want to call your application as a subsequent application, second application, then the offense has to be similar. Okay. Now listen carefully. The next paragraph is extremely important. This is the most important paragraph of the entire compounding discussion. Once this is done, we can go for the illustration. All these questions are nothing great. These are very, very simple questions. Okay. Now let's read. This is the most important paragraph of the entire guideline. Where the compounding application has been filed in the prior guideline, it means before 17th October, and are pending, if that is pending on 17th October, criteria number 1, or were rejected before 17th October, rejected, or have been compounded before 17th October. It means you have been deprived from going to jail before 17th October. Okay. So try to understand the three possibilities. If you have filed an application before 17th October, and if that application is pending today, or it was rejected earlier, or it was compounded earlier, it means your compounding proceedings completed earlier in the old guideline only. All such applications filed prior to issuance of these guidelines shall together be considered as first compounding application. Very important paragraph. all three of them will be together called as what? First compounding application. For example, on 15th Jan 2024, on 15th Feb 2024, and on 15th March 2024. 276B, 276B, 276B. What is the status of this today? This case is pending today. This case was rejected in the earlier guideline because all the applications were filed in earlier guideline only because it is before 17th October. And this was compounded in earlier guideline. Now, on 15th of December 2024, 276B, I made a new application. Now, you have to tell me this application will be considered as which application? This application will be considered as first application, second application, third application, fourth application. Please, all of you have to answer. If you have understood this paragraph, then you will be able to answer. Please answer. Deva, read the provision carefully. Where the compounding application, no, listen carefully. No, you are making mistake. Where the compounding application has been filed in accordance with the prior guidelines and are either pending or rejected have been compounded. All such applications shall together be called as first compounding application. So now what does the law says that? The law says that all the applications which are pending, which are rejected or which are compounded in the previous guideline, all of them will be together considered as a first application. If all of them together is considered as a first application and this is a separate application for separate year, this has nothing to do with these 3 years. This is altogether separate. That's the reason I've said this is a new application. So this will be considered as which application? Please tell me now. This will be considered as a second application. Are you clear? And a compounding fee of 1.2 times will be chargeable over here. Are you clear? The example given by the ICAI is on this only. I will show you that example. One last thing before I go ahead. Can you file an application after prosecution is launched? The answer is yes. The government gives you an option to file even application for compounding after the prosecution is launched. But here there is a condition. If the application is made beyond 12 months from the end of the month in which the prosecution complaint is filed, the compounding charges shall be increased by 50% of the amount calculated above. So, if the prosecution is launched in January, and if you are going for compounding within 12 months, then normal compounding charge will apply. But if you go after 12 months, then the compounding charge which will be applied on you will be how much? 1.5 times. That is 150%. Okay. Now, these all questions we have already discussed in the form of what? In the form of our discussion above. They have just been given in the form of FAQs. Now, I am coming to what? I am coming to this example. This example is something which is going to be tested in the examination if ICAI wants to ask something based on this particular concept. If ICAI wants to test this concept in the exam, they will ask you this example only. Okay. So, you have to understand this example. You don't by heart this example, please. They might twist the dates, they might twist the amount. So, please don't by heart. Try to understand with whatever we have done so far. An applicant has filed different application on different dates to compound different offences which will be considered below. Step by step you have to answer. Scenario, application date, what is the status today, offence and the financial year, sequence of application, offence included in earlier application and the rate of compounding. How to understand this question is also important. The format, the layout of the question is also very different. Now on 15th of Jan 2021, you made an application, obviously under the previous guideline. That offence was 276B, it was for 2012-13 and it got compounded. Okay. In the earlier guideline, it was compounded. And it was 276B. On 17th of October 2022, you made another application which was 276C, different section. The offence is different. It is for 18-19. Again under the earlier guideline. Third application. You made third application on 18th of August 2023. Again under the old guideline. Got rejected. But the offence is similar to this. Okay. Now you are making the fourth application. The fourth application is also under the earlier guideline, but which is pending. So now, please tell me, listen carefully now. This application, which is for 276D, listen carefully all of you. You have to answer now. Don't see the answer. Now this application which is filed under the earlier guideline and which is pending on 17th October 2024. And this is the offence which I have not committed earlier. So this will be considered as, please tell me. Please tell me. This will be considered as first application for what? For 276D. Is everyone clear? And normal charge will be applicable over here. And for this, you don't have to pay any fresh application charges also. Compounding fee is not required. Why? Because all pending cases are automatically transferred under the new regime. Right or not? This will be considered as first application and normal rate will apply on you. Is it clear? For every offence, you have to separately compute. Okay, now on 1st of November 2024, on 1st November 2024, I am filing a application. I am filing a single application for application rejected earlier. Please tell me, of 276B for 13-14. So this application is for application which is rejected earlier. So this will be considered as which offence? Please tell me. You have to answer. This will be considered as the second offence. Why? Listen. Technically speaking, it is not second. Technically speaking, it is not second. Technically speaking, if you see, have you filed 276B here? Yes. Have you filed 276B here? Yes. Have you filed 276B here? This is the third time you are filing 276B. Correct? Technically. Technically, you are filing 276B for the third time. But. All offences which are earlier compounded or which are earlier rejected will be considered as only single application. Did you understand this logic? Are you clear? See, technically, this is third application for 276B. But all applications which are filed under the previous guideline, which are compounded, which are pending or which are rejected, they are consolidated, called as one single application. Correct or not? Therefore, this will be called as second application. Yes, in application dated 15 Jan and 18th October, considered as second time, 1.2 times of the normal rate. There is an asterisk over here. Let's read that. The applicant has opted for compounding of 276B offence for the third time in third application. Technically speaking, he has applied for the third time. But all those applications which are applied before 17th of October are all merged and considered as one. Accordingly, compounding rate at 1.4 times of the normal rate should apply. Accordingly, 1.4 times should apply because this is the third application. But, however, since both applications were filed under the previous guidelines, all such applications will cumulatively be considered as first application. Thus, offence under first two applications will be considered as clubbed together for the calculation of compounding charges. Is everyone clear with this? I would like to know yes or no. This is the answer. I want answer from all of you, because if you say yes now, my efforts are properly put then. Otherwise, I have not put my efforts properly to explain you the concept. And you have to answer me the next one also. Now you are making another application on 18th of December. Now you are making consolidated application for three things: 276B, 276C, 275A. Now please tell me, for 276B, this will be considered as which application? For 276B, this will be considered as which application? You are making three offense together. Consolidated application for three different years: 17, 18, 19, 20, 23, 24. For 276B, this will be considered as which number, offense number what? For 276B, this will be offense number what? For 276B, this plus this is first offense. This is second, and therefore this will be third. And if it is third, it will be 1.4 times. Is everyone clear? What about 276C? 276C, this will be which offense? Tell me fast. I am not showing you the answer. For 1920, you are filing 276C offense. This will be considered as which offense? Offense number? Application number? Second, because earlier you have made one time your offense under 276C was compounded, correct? So this will be considered, this will be considered as first, and this will be considered as second, correct? And if second, it is 1.2 times, correct? Very simple. 275A, which offense? 275A, which offense? Have we made an application for 275A earlier? For 275A, which offense? It will be considered as application number? Application number 1 only, because we have not applied for 275A earlier. So this will be first application, normal rate. Is everyone 100% clear with this? Clear? So there is one more example over here, which I would like to explain you all. Okay. Shall I? Now, one provision which I have told you just 10 minutes before, that if you go for compounding after 12 months from the date of prosecution is launched, after 12 months you are going, then how much compounding charge you have to pay? 50% more, correct? Whatever is determined, of that 50% more, correct? Now, next concept is on that only. Okay, next example is on that only. Now, let's see this. Assessee has made a TDS default of how much? 10 lakh rupees. For how many months? For 3 months. During the financial year 1920. So, assessee has made a TDS default of 10 lakh rupees for 3 months during the financial year 1920. Now, the prosecution is launched on 1st April 2022. This date is very important. Normal compounding charges is 45,000. So, now, if you go for compounding within 12 months, you have to pay 45,000. After 12 months, you have to pay 50% more. Now, scenario 1, no earlier application rejected. So, if earlier no application was rejected, can I say this will be considered as the first application? Yes. Case 1, scenario 1, case 1. Listen carefully. Scenario 1, no earlier application rejected. Case 1. You made an application on 12th of October 2022. Are you making within 12 months from the launch of prosecution? The answer is yes. So here normal compounding charges will apply. Normal compounding charges is 45,000 rupees. Okay. Scenario 1, case 2. Suppose you have filed a compounding application on 31st of October 2024. Okay. Under the revised guideline. Now you are filing after 12 months. So now 45,000 will be increased by 1.5 times, which will become 67,500. In both the cases, both application will be considered as first application only. That's the reason normal compounding is applicable to you. Here normal compounding is applicable. Here also normal compounding, but 50% extra because you are filing the application after 12 months. Is everyone clear with the scenario 1? Now scenario 2 is beautiful. In scenario 2, what is happening? First application rejected. Now you are filing revised application. So on 12th October, you filed an application which was rejected. Now, under the new guideline, you are filing second application. So, in the earlier guideline, you have filed one application. Now, you are filing another application for rejected one. So, this will be considered as second one, correct? Are you clear? So, because of second one, first of all, you have to pay 1.2 times of the 45,000 rupees. Okay? Whatever amount will come, that will be your compounding charge. Plus, you have to pay 50% extra because you are filing the application after 12 months from the launch of prosecution. Correct or not? So here you have to multiply twice. Once you are multiplying, because this is the second application. First rejected will be considered as first application and subsequent application will be considered as second application. And then you have to multiply that by 1.5 times because you are filing the application after 12 months. Are you clear or not? Please tell me. Please reply. Okay. So this is what compounding is all about. Now, one last thing is over here, which is there is nothing great in this. Okay. I will explain you this also very easily. Compounding in case of companies and in case of HUF. Now see, in case of companies and HUF, what happens? Suppose I am a company. So in case of company, the company will be called as main accused. And in case of company will be considered as main accused, and the director of the company will be called as co-accused. Okay. So what is company? Company is main accused and the director of the company is what? It is co-accused. So the law says that if the company has made any mistake, obviously the company is not the one who is making the mistake, it is the director who is making the mistake. Okay. Hindi is already done yesterday. Go and check the YouTube channel. Don't unnecessarily type the same. Okay. This year. Suppose I am a company. and there is a director. Obviously, offense is done by whom? Offense is done by director, not company. Practically speaking, company is an artificial person. What will company do? Cannot put company in a jail now. You have to put director in a jail. Yes, maximum you can impose fine on a company. Cannot put company in a jail. But yes, to director you can put in jail also, you can impose fine also. So in this case, what happens? Both of them have to make an application. Okay. Check. When an offense is committed by a company or HUF as per 278B, 278C, an application for compounding may be filed separately. Company can file separately, director can file separately, or co-jointly, or both of them can jointly file an application. Co-applicant. Company is also applicant and the director is also applicant. By the main accused will be company HUF and the person deemed to be guilty of the offense under 276B, which are referred as co-accused. Co-accused will be considered as director. In case of HUF, the co-accused will be considered as karta. In case of offences by company or HUF, the main accused or co-accused may apply separately or co-jointly. So both of them can apply separately or both of them can jointly also apply for the application. On payment of compounding charges for the offence by any one of them separately or jointly, the compounding charges can be paid by either company or it can be paid by either directly or both of them can share jointly. The competent authority shall compound the offences of the main accused as well as the co-accused. Then the offence will be compounded for the main accused as well as the co-accused. Sir, what is the offence in case of company? In case of company, you cannot put them in jail. In case of company, they will compound your fine. In case of director, they will compound your what? They will compound your prosecution. I hope it is clear to all of you. Now, they have given some questions based on this. Nothing great as such, but still we will read it once. They have only clarified whatever we have done in the previous paragraph. Now, whether co-accused, who is the co-accused? Director, can file compounding application under the revised guidelines? Yes, why not? Yes, co-accused may apply for compounding of offence separately or co-jointly, which we have already read in the previous paragraph. Now, the next two questions are, this question. Whether compounding application of co-accused, that is of director, was rejected earlier on the ground that the main accused has not filed the compounding. So, what is the reason for rejecting the director's application? The director's application was rejected because the main accused, the company, has not filed for compounding. Whether such applicants will be eligible for filing again? Whether the director can file again? See, the director's application was rejected. On what ground? On the ground that the company has not filed the application. Whether such applicant will be eligible for filing again? The law has said yes, they can do so. The next question is an opposite of that. Whether the compounding application of the main accused was rejected. Now the application of the company was rejected on the ground that the director has not filed. Can they again file the application? Yes. So if the application of director is rejected on the ground that the company has not filed the application, you can file the application, or vice versa. In both the cases it is allowed. And next question, if any application filed by co-accused or accused, co-accused means director, accused means the company, under the previous guideline is pending. So what will happen? You don't have to file any fresh application, same as the normal case. So in the previous guideline, if there is an application pending on 17th of October, it will be shifted to the new guideline, and what? No fresh application or no fresh application fee will be charged on you. So rest of the things are absolutely similar to what we have done for the normal SSC. Okay. So whatever we have done for the normal SSCs, all the procedure, everything is same. Time limit, everything. 1.2 times, 1.4 times, 1.6 times, everything. All those applications which are rejected in the previous guideline, which are compounded in the previous guideline, which are pending in the previous guideline, they will all together be called as one single application. Rest all are same, which are mentioned over here. Okay. So this is what this great provision of compounding is all about. So I hope you all have understood the concept of compounding. If yes, please comment fast so that I can go ahead with the next part. Please tell me. Okay. Let's start now. The next one. Next one might be an important amendment for you all. Compounding is the most important amendment out of all the amendments that we have done or that we are going to do in this particular sheet. But the next one may also be important for you all. You all might be knowing that there is a provision, new section which has been introduced by Finance Act 2024, 44 BBC, for non-resident presumptive income, all those non-residents who are engaged in operation of cruise ships in India. So if a non-resident is engaged in operation of cruise ships, in India, they are eligible for presumptive income under 44 BBC, and their deemed income will be what? 20%. Their deemed income will be subject to 20% deemed income. Now, the CBDT has issued some guidelines, some rules that such non-residents have to fulfill some conditions. Okay. Now, what conditions they have to fulfill? That is mentioned in Rule 6GB, and they have to fulfill 4 conditions. Okay. If the non-resident wants to enjoy the provisions of 44 BBC, they have to fulfill 4 conditions. Let's see the 4 conditions. For the purpose of Section 44 BBC, an assessee being a non-resident engaged in the business of operation of cruise ship has to fulfill 4 conditions. First, it operates a passenger ship. It's a passenger ship. It is not a cargo ship. It's a passenger. It is for carrying people, not for carrying luggage. Having capacity of more than 200 passengers. Capacity of the cruise ship has to be more than 200 passengers, or the length of the ship should be at least 75 meters or more. Okay. So the capacity should be at least 200, more than 200 passenger, or the length has to be more than 75 meters. 75 meters or more. Okay. Exact 75 meter is also okay. Plus, it is for leisure, it is for recreational purpose. It should have proper dining facility for eating and all. It should have proper cabin facility for sleeping and all. Okay. In the cruise. This is the first condition. Second, has to operate such ship on scheduled voyage. So there has to be some scheduled journey. The journey has to be scheduled one, that it will start on this date, it will end on this date. They have to pre-decide the schedule and then accordingly announce the passengers. And there has to be a shore exertion. What do I mean by shore exertion? Shore exertion means they will leave you at a shore. Say they will take you from Kerala and they will take you from Kerala to Goa, and then they will leave you at Goa and they will tell you that go and explore Goa for 12 hours and come back in the evening and we will go back to Kerala. So they will leave you at a particular shore for exploring that. Touching at least 2 seaports of India. So they should at least touch 2 different seaports of India, or they should touch the same seaports of India at least twice. Okay. So at least they should touch 2 different seaports of India, or at least touch the same port of India, same port at least twice. Third one, as I've already told you, it is for carrying of passengers, not for cargo. Okay. It is for passenger, not for cargo. And last, it should operate as per the Ministry of Tourism and Ministry of what? Shipping. Is it clear? So it should operate as per the Ministry, Government of India regulations, which is given by the Ministry of Tourism or Ministry of Shipping. If these 4 conditions are fulfilled, they will be eligible to claim the benefit under 44 BBC. Otherwise, you will not be allowed 44 BBC. I hope it is clear to all of you. Is it clear? So very simple amendment, nothing great as such. Next one. Next one is also very simple amendment. If you are a non-resident and if you are opening a license office in India, then you have to file a statement in India as per section 285 to a prescribed authority within prescribed time of your activities. So if I am a non-resident, if I have a license office in India, I have to file a statement in India within prescribed time to prescribed authority. Now that prescribed time and prescribed authority was not defined in the law. So who is that prescribed authority? What is the prescribed time? So both of them has been defined in this particular notification under Rule 114 DA. The prescribed form is 49C. You have to fill the details of your activities in form 49C. And you have to fill the details to the assessing officer. You have to give that form to the assessing officer within 8 months from the end of the such financial year. You have to give that particular details till when? Within 8 months from the end of such financial year. So for financial year 2024-25, you have to give till 30th November 2025 within 8 months from the end of the financial year. Is it clear? I hope it is clear. Okay. Now coming to the next point. Okay. Now before I discuss the next point, I have to give you some background of the next point. There is a provision in your syllabus in CA final under section 92 CB in transfer pricing by the name called as safe harbor rule. What? Safe harbor rule. Now while teaching the provisions of transfer pricing in the class, I have told you that safe harbor rule is not applicable for your exam because safe harbor rule is not notified. Whenever it will be notified, it will be taught to you. I will teach you all, and I have also shown you the study material of ICAI, and I have shown you the footnote in the study material where it was written that safe harbor rule is not notified today. In future, if it is notified, we will put on the website of the ICAI, and they have put it on the website because now safe harbor rule has been notified. But first of all, we need to understand what is safe harbor. Safe harbor means the government will give you some circumstances in which if you show a particular amount of profit, particular percentage of profit, government will accept that profit and government will not raise any question on you. It's a kind of presumptive income where you show 8% profit, 6% profit under 44AD now, similar to that. So the government will tell you that if you want, it's an optional rule. It's not mandatory to opt for safe harbor rule. If you want to opt for safe harbor rule, then opt. If you don't want to opt for safe harbor, don't opt. Now, safe harbor is applicable in two cases. First, safe harbor is applicable in case of transfer pricing for determining arm's length price. Okay. It is applicable for determining arm's length price. If I have my color book over here, I can just show you all. Yes, safe harbor rule is for two purposes. This section empowers CBDT to make rules of safe harbor. CBDT shall provide the circumstances under which the assessee shall be exempt from what? Transfer pricing provisions. This is the first reason why safe harbor rule is brought. The department will tell you that this much arm's length price if you show, this much profit if you show, no transfer pricing. You don't have to compute an arm's length price. For manufacturing business, you have to show this much profit. For service sector, you have to show this much profit. That's it. This is the first safe harbor. Second safe harbor is for non-residents for determining their income under section 911 under business connection. So if a non-resident is earning income from India, the government will prescribe some percentage, and if you show that much income as your income, then that is sufficient. The second safe harbor is for what? Is for non-resident assessees, which is covered under 911 under the definition of business connection. Try to understand the difference between the two. The first one is to determine the arm's length price of transfer pricing, and the second one is to determine the PGBP income. In both the cases, the government will tell you one percentage of profit, you show that much profit, and we will not raise any question on you. Now, for September 2000, 25 students. Amendment till 28th of Feb are applicable, 6 months prior to the examination. And before 28th of Feb 2025, the CBDT has notified these safe harbor rules. Therefore, this is applicable for September 25 and Jan 26 also. Obviously, whatever is applicable for September 25 is impliedly applicable to Jan 26. Now, this safe harbor rule for international transaction for transfer pricing assessees, this is also notified, but this is notified after 28th Feb 2025. Therefore, this is fortunately not applicable for September student, but this is definitely applicable for Jan student. But this is not included in this particular sheet because this sheet is exclusively for September. For Jan student, as I have told you at the beginning of the discussion, that separate sheet will be brought by the ICAI. At that time, whenever they will bring the separate sheet incorporating this particular part of the safe harbor rule, I will explain you that also. But Jan 26 students, listen carefully. You are very unfortunate to take birth 6 months later. Why? Because this safe harbor rule is a matter of 5 minutes. But this safe harbor rule is a matter of 5 hours. Okay, I am not trying to scare you, I am just trying to warn you. And this safe harbor rule of transfer pricing will definitely be applicable for your exams of Jan 26 and onwards. So today we are not discussing this because today we are discussing as per September 25, Jan 26. Whenever the ICAI will bring the notification, at that time I will again keep one session and I will explain you all these things. Don't worry. Okay. As of now, let's try to understand the safe harbor of what? Non-resident assessees. Shall we start? Please tell me. Now this is very simple, nothing great as such. Sir, who is covered over here? Certain eligible assessee. Sir, who is eligible assessee? Pay attention. Eligible assessee over here is a foreign company. What kind of foreign company? Who is engaged in diamond mining. So the foreign company should do what? It should be engaged in diamond mining. And it should exercise the safe harbor rule. As I have told you, it is not mandatory, it is optional. If you want to come, you come. If you don't want to come, don't come. If you don't come here, then you have to follow the normal provision of the law and compute your income. Okay. So eligible assessee is a foreign company engaged in diamond business, mining of diamonds. What is the eligible business? You should sell raw diamonds. The assessee should sell what? Raw diamonds. To whom? The raw diamond should be sold in any notified special zone. You remember I have told you in class that there is a certain notified special zone in Mumbai, in Bombay, by the name called as Bharat Diamond Bourse. Bharat means Bharat, India, diamond means diamond, and bourse means market. There is a special market made in Mumbai for trading of diamonds, for trading of raw diamonds. So the foreign company should sell where? It should not sell in Chennai. It should not sell in Tiruvananthapuram or Guntur. It should sell in the Bharat Diamond Bourse. Okay. In any notified special zone. It is not applicable if you sell anywhere in the India. No. Only if you sell in the notified special zone. Then whatever is your gross receipt. Okay. Whatever is your gross receipt, I'll directly come to the next page. Of that, you have to show 4% or more as your business income. How much business income should be shown? So whatever is your gross receipt, if you show 4% or more of that as your income, then the government will not raise any question on you. They will accept your profits. Okay. At least 4% you have to show. Now, coming back to the discussion. The most important point over here is you have to sell raw diamonds. Now, what do I mean by raw diamonds? The government has defined raw diamonds over here. Raw diamonds includes what? Raw diamonds includes the following: diamonds that are uncut or unpolished. What are uncut and unpolished diamonds? These are absolutely diamonds of natural form, which are absolutely not shaped. Those are directly taken out of mines and sold. No activity is done on that diamond. That is known as uncut or unpolished diamond. Second, unassorted diamond. Unassorted diamonds are those diamonds which are not assorted based on quality or grade. Generally, diamonds are classified based on quality and grade. So that quality and grading is not done of that particular diamond. Third, unworked, simply sawn, cleaved or bruted diamond. These are minimally processed diamond. Little bit process is done. It is better than the uncut and unpolished diamond. Fourth, not conflict diamonds as defined by Kimberley process. Sir, what is a Kimberley process? It's a process, it's an international process of identifying whether the diamond is genuine or not. Because in diamond market, there is a lot of fake diamonds. So Kimberley process is formed in 2003, which tells us the steps to identify whether the diamond is genuine or not. And it should be a not conflict diamond. Not conflict means it should be a real diamond. It should not be a fake diamond. There should not be any conflict about whether the diamond is proper or not. Fifth, diamonds that are accompanied by Kimberley process. And last, diamonds which are mentioned under heading 7102 of the Customs Tariff Act 1975. So these are the diamonds which are considered to be raw diamonds. Who will sell these diamonds? Foreign company. What is the foreign company doing? Mining of diamonds. Where it is selling? It is selling in any special notified zone. Then how much will be the income? 4%. 4% will be the profit. Am I supposed to accept? Am I supposed to opt this scheme? Yes, you have to file an application, etc. That I will tell you how. It's a very simple process. Now, once you have opted for this, that your income should be 4%, then no PGBP deduction shall be allowed. Just like 44 AD. Then WDV of the asset will be computed in the normal manner, just like PGBP. No set off of loss, unabsorbed depreciation shall be allowed. No losses of other business can be set off against this business. Not allowed. Not allowed to set off. Okay? You are not allowed to do all those things. The provisions of transfer pricing you have to follow. It means you have to follow the provisions of transfer pricing under 92D, that is like maintenance of books of accounts, information, documents. You have to do all those things, okay? Provisions of transfer pricing has to be followed by the SSC. Similarly, Form 3CB report, which is filed under Section 92E, that has to be done. Because a foreign company is doing transaction in India, transfer pricing provisions may apply. So you have to follow all the transfer pricing formalities has to be done. Computation need not be done, but the procedures have to be followed. Computation will be done as per this rule only 4%. That's it. Last but not least, you have to fill a form in Form 3CEFC. You will fill the form. If you want to exercise this option, you have to fill a form 3EFC. 3CEFC, sorry. 3CEFC. To whom? To the assessing officer. Till when? Till the due date of filing of return. Okay? And if you don't exercise this option, then the income will be determined as per the normal provisions of this act. You have to compute your PGBP income in that case. In some cases, the officer will declare your option as invalid. You made an application, the officer will declare as invalid if you don't give sufficient information, where the SSC has availed the safe harbor by furnishing incorrect facts. You gave wrong data to the officer. You gave fake data to the officer that you are selling raw diamonds, but actually you are not selling raw diamonds. That you are selling diamonds to a person notified in special zone, but you actually are not selling diamonds to a person specified in which are in notified zone. You are selling to somebody else. If you are giving incorrect information, conceal any fact, AO will give you an opportunity of being heard and will declare your option invalid. And then you will be governed as per the normal provision of the Act. He will also serve a copy of order to you. He will serve a copy of order to you and will declare the option as invalid. Last but not least, in DTAA Model Convention chapter, we have done one procedure by the name called as Mutual Agreement Procedure, if you remember. Remember? Mutual Agreement Procedure. So it's a procedure where the competent authority of two nations will fight for you. I am in India. This is UK, and I feel that the UK tax authority is not doing justice to me. So I will request the competent authority of India, and they will talk to the competent authority of UK. That proceeding is called as mutual agreement proceedings. Now, the law says over here that if you are going for safe harbor, then you cannot take mutual agreement procedure benefits. Moral of the story, if you want to go for safe harbor, then go for safe harbor, then ignore MAP proceedings. Or if you are going for MAP proceeding, then ignore safe harbor. Both of them cannot coincide at the same time. So this is what this safe harbor is all about. As I have told you, it's a very simple discussion. There is only few things to remember. First, eligible assessee is foreign company selling raw diamonds. Second, it is selling to a in what? In special notified zone. Deemed income 4%. That's it. It's an optional scheme. No deductions or disallowance, etc. will be applicable of PGBP. No set off of loss, no UAD. That's it. Nothing great as such. It's a very simple discussion. But Jan 26 students, beware of the safe harbor rule, which is applicable for transfer pricing assessees, which came after 28th of Feb, and it is applicable for your exam. That is dangerous provision. But you have to keep trust on me. You have to keep faith on me. That also I have summarized in 5 to 6 pages. That's it. Matter of 5 hours I have discussed. I am going to discuss with you all in future. That I have wrapped up in 5 to 6 pages. Don't worry about it. Okay. Now, one last thing over here is an amendment, a notification in respect of 94B. In 94B, what is 94B? First of all, 94B talks about limitation of interest in transfer pricing. You remember that in some cases in transfer pricing, you have to disallow the interest in excess of 30% of EBITDA. Remember or not? Interest in excess of 30% of EBITDA has to be disallowed. I am in India. I am Indian company. I am borrowing some money from my associate enterprise outside India. I am paying them interest. Then above 30% of EBITDA is disallowed. Now, in that, the borrowers have some exception. Remember that if the borrower is a banking company, then this section is not applicable. That if the borrower is a say insurance company, then this section is not applicable. Third, if the borrower is an NBFC notified, then this section is not applicable. And the fourth one is an amendment made by Finance Act 2024, that if the borrower is a finance company located in IFSC, then also this section is not applicable. Check. Check. If the borrower is what? Is a finance company located in IFSC, then also this section is not applicable. So with respect to this, the government has given a notification that who is a finance company located in IFSC, what activities they should do, when can they be called as a finance company located in IFSC. So for that, the government has given a notification over here. Let's see. A finance company located in IFSC has been excluded from the applicability of what? This section. A finance company is defined in section 94B5 as a finance company as defined in regulation 21E of the IFSC Authority Finance Company Regulation 2021, which satisfy the prescribed conditions. They have to fulfill some conditions. The finance company means a financial institution. From here, the real discussion starts. Finance company is what? Finance company means a financial institution, separately incorporated, to deal in one or more of the permissible activities. So they should be dealing in one or more permissible activities, provided it does not accept money from public. It does not accept public deposit from resident and non-residents. The first thing that the finance company should not do is it should not accept money from general public. It can take money from corporates, but not from residents and non-resident. They should not accept public deposit. Okay, first. And second, it is not registered as an authority with the authority as a banking unit. It is not a bank. So if you want to call yourself as a finance company, First, you should not accept money, should not accept public deposit from resident, non-resident, and you should not be considered as a banking unit. Should be considered as an NBFC or other financial institution, but not as a bank. Plus, this finance company has to carry out, it should be located in IFSC. This finance company should be located in IFSC, that is mentioned here also, okay? In the act also, that it should be located in IFSC. And they should be engaged in for one or more of the following activities. Now, these are general activities, that they should be engaged in lending in the form of loans, commitment, guarantee, etc. They should be engaged in factoring, forfeiting of receivables. They should be engaged in functions of global or regional corporate treasury, etc., lending, hedging of currency, commodity risk. Plus one more thing, whatever interest they are paying to non-resident, that should be in foreign currency. So if the finance company is taking loan from a non-resident and if they are paying interest to the non-resident, then that interest should also be paid in the foreign currency. Yes, if they are taking loan from Indian people, not Indian public, because public deposit is not allowed. If they are taking from residents, say from Reliance Industry, if they are taking any loan and making payment of interest, then that can be paid in INR. But if they are taking loan from International Monetary Fund and making payment to them, then that has to be paid in foreign currency. So this is the last amendment which is over here in the ICAI statutory update. So here I complete my commitment to you all, to all my dearest students who wants to learn direct tax exhaustively from me in full English. So I have done my commitment. Okay. So there is one more thing that I will be doing it in the next few days. That is, their ICAI has added few case laws also. I will show you. Just wait for 5 minutes. Some important things I would like to say you all. So there is one more thing that the ICAI has put over here, and that is some case laws has been put. Judicial update. So these case laws also I will be discussing with you all. Don't worry. Total 5 case laws they have put, out of which 3 case laws we have already done earlier in the last attempt in May 25. So there are 2 extra case laws which they have put over here. Okay. So those 2 extra case laws I'll be dealing with you all, and I will also give the summary of that also. One announcement also I would like to make for you all, and that is you can share it with your friends if you want, that I will be visiting for face-to-face lectures from October onwards. For my dearest students, of you have shown so much love on me that I am forced to come to your place in South India. I'll be coming for face-to-face lectures in South India and Guntur in the month of October. If anybody who stays near Guntur can definitely come and meet the month of October. Okay. And any of your friends, they want to enroll our batch, you can tell them. Okay. It will be live also, online live, it will be face to face also, and it will be Google Drive also. My batches for May 26 will start from the month of October. One request, sir, please upload remaining small topics in full English. Yes, I will try. I will try my best. Don't worry. I will try to upload capital gains, etc. Okay. I will do that. So bye all of you. Take care. See you soon, and all the very best for your exams if you have given your exams in September. Sorry, if you are given your exams in May 2025. Till then, bye all of you. Take care. Share this video to maximum people in South India. Maximum. All those who want to learn direct tax in English. Okay. Till then, bye all of you. Take care. Bye.